A positive financial report as the pension sector indicates growth in assets despite the pandemic.
As you can see, the investments generated a return of 13%, enabling an average interest of about 9% to members. Of course, the income stability now can be seen prominently because the driver is the fixed income instruments. Then we have sector assets. You can see increase from 13.2 trillion to 15.4, accounting for 11% of GDP. And of course, this is all pegged to about 18% of the workforce, people who are in some way contributing to the retirement benefit sector.
The agency reports a steady growth from the NSSF and voluntary occupational schemes, growth attributed to the healthy returns from fixed income instruments and yields from securities were the major source of income, accounting for 96.3%.
If you look at our market today, government securities are providing the highest returns. If you look at the recent Bank of Uganda yield curve to date, I think you'll realize that the 12-year bill is probably around 13%, and pension funds invest for long term, and the rates are probably in the tune of 15-16%. So any prudent investor, no investment in this market today that can provide you such an handsome return.
The effect of the pandemic, however, left a slight dent on contributions by some 12%, but largely Ugandans rushed to find safe investments.
With COVID, I think there's a realization of the need to save for retirement. And we see more people coming in and asking which are those investments that they can use. And just this quarter alone, we already have 4 new schemes that we're working on. So the future also has more members coming on board and improved compliance, but majorly on the supervision side, risk management, improved risk management in the schemes with the service providers, and of course that prudence in governance by the trustees.
In light of the disruptions occasioned on the sector by the pandemic, the regulator reiterates the need to strengthen its operations with an eye on growing contributions.
If you look at the sector today as a whole, the total contributions are around 1 trillion, 1.2 trillion annually. Now, if there's another 600 that is going to come in annually, you can just imagine what the sector is going to be like. Huge. Currently contributing to 11% of GDP and holding 50% of the domestic savings to GDP to date. Huge.